Welcome to another amazing episode of Raising Private Money. I'm Jay Conner, your host, also known as the Private Money Authority. Welcome to the show. This is the podcast where we talk about how to raise private money for your real estate deals, actually without ever having to ask for money. Well, my guest today, in his career, he has raised over $100 million in private money from private investors. And he's going to pull the curtain back for us in this episode. You're going to be amazed as to how he and his team has gone about raising private money for his real estate deals. Well, not only is he a real estate entrepreneur, but he is also a U.S. Navy veteran. Now, he began his real estate career as a broker with Sperry Van Ness, and he won actually their National Rookie of the Year award all the way back in 2010. Well, in 2012, a couple of years later, he founded a company called Fenix Private Capital Group. And the reason he actually put that together was to focus on improving underperforming real estate assets throughout Arizona. Now, at that company, at Fenix, he participated in purchasing and repositioning value-added multifamily, office, retail, all kinds of real estate assets and industrial properties all across Arizona. Now, how did he do this? Well, this was accomplished by buying properties either by short sale or auction, bank owned, or actually conventional sales using personal capital, private lender money, banks, and raising equity. Well, fast forward to a few years ago in 2019, he took note and realized that the real estate prices, and didn't we all know this in 2019, were sort of eclipsing pricing records set before the Great Recession. Well, he's got the spidey sense, and he saw an opportunity to help homeowners, lenders, investors, and if and when the market corrected, he co-founded this particular fund called the DO or the DO Income Fund. And that's a distressed debt fund that purchases underperforming and non-performing loans originating by private lenders across the country. Now, since then, he and his team have transacted on hundreds of loans from Washington to Florida across a very broad spectrum of property types. In just a moment, you're going to meet my very special guest, and we're going to pick his brain on raising private money, Mr. Thomas McPherson, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Well, hello there, Thomas. Welcome to the show.
Jay, thanks so much for having me.
I'm so excited to have you. My land's over $100 million in private money and private investors. And so on today's show, Thomas, I want you and me to actually speak to both segments of our audience here on the podcast. We've got real estate investors that are looking to raise private money for the real estate deals. And we have another segment of the audience that are people that are just interested in being passive real estate investors and just want to collect high rates of return safely, securely, and have a reliable rate of return without having to go out and negotiate deals. So first of all, let me ask you this question. How are you qualified to talk about what you're going to talk about?
That is probably the best question that you should always lead out with. I have been in real estate now for over 17 years, bought my first property in 2008. I've got considerable experience as both a broker on the multifamily commercial side. I got into buying distressed debt from banks and special servicers in the Great Recession, in addition to properties, all kinds of property type, as you outlined earlier, multifamily, office, industrial, retail. I've built from the ground up several very large projects. The largest one to date is over $44 million. We actually won Sustainability Project of the Year out here in Arizona for that project. So, I've got quite a bit of experience from brokerage to raising private money to doing deals, development, repositioning quality assets, as well as in the private lending and distressed debt workout space. And in addition to that, some leadership experience in the Navy.
Wonderful. Thank you for your service, by the way.
Thanks for paying taxes.
Absolutely. Absolutely. So you mentioned different types of asset classes. You mentioned multifamily. Have you done multifamily new build, or has it all been like you purchase existing multifamily and add value to cash out a few years down the road?
That was absolutely my strategy for the first 10 years in the business. And I have since pivoted to adding development, ground up new construction into what we do. I'm really passionate about, buying, owning, and operating A quality assets, something that where all the skeletons are hidden, and you get to do that in new build. So we do both. I like both for a variety of reasons. I think that the development risk when you're buying and building new construction is substantially higher, and you also have opportunities to earn higher rates of return. So we do both, to answer the question.
Right. Any other commercial type projects other than multifamily?
I have done retail, large retail experiential centers, office centers, industrial. Right now we really like industrial, small, medium-sized industrial in the Arizona marketplace. We're seeing a lot of industrial activity, as well as multifamily. Our population is continuing to grow at a very rapid rate, so housing is a big need here for us in Arizona.
Have you ever invested in single family houses?
I have, and we do. We have quite a few loans that we make with our private credit fund. And I have also built single family houses and fixed and flipped and bought many of those as well. But my primary love is in commercial real estate. It's, for me, relatively speaking, the same amount of work, just with a few extra zeros.
Hey, a few extra zeros. Nobody minds a few extra zeros, right?
That's right. And not only that, but everyone always tries to say, hey, add a zero. I say add a comma.
Oh, that's even better. That's even better. So let's dive in and talk about raising private money. First of all, why private money and not just keep it all institutional?
Well, I'm a big fan of what you said, because I've had to do this before. I go and I beg and I borrow and I plead with the banks to give me money. And, they want my firstborn, they want a blood sample and everything else under the sun. And I swear their fundamental, basis is to start with no. They want to just tell me why the loan's not going to work. And I have to beg, borrow, and plead to get them to do that loan. Private money is so much easier in the sense that, folks understand what you're trying to do here, and they're willing to participate and help really drive forward my investment goals, their investment goals, and do some good in our community. So I think it's a great way to diversify investors from the stock market, more traditional investments, and earn a fantastic yield that's very uncorrelated to traditional returns and not nearly as volatile.
Yes, yes. No begging, no chasing, no pleading, no pulling up your skirt for them to look at your personal assets, and et cetera. Yeah, my experience this world of private money is just so much easier, so much quicker. I actually have 20 reasons why I love private money over institutional money, but we won't dive into that right now. The main reason I like it the best, Thomas, is as an operator, it just really puts me in the driver's seat. You agree with that?
100%. Yep, 100%. It's we have much more discretion. You have to, be a good steward of those people's money, and that is incredibly important to me. One of the things I learned in the military was alignment creates all of the right decision-making processes. And so one of the things that I've really focused on is making sure that I'm taking risk along with all of my investors. As a matter of fact, in my most recent investment fund, I've actually subordinated my entire investment to all of our investors, so that if we ever take losses, I lose my money first, so that my investors know we are completely aligned from a risk standpoint. I do not want them to lose a penny. It means I've lost over $3 million. From a reward standpoint, the other way that we get good alignment is our investors get paid their entire preferred return before we're compensated. So with that private money side, I think you have much more discretion and a much higher kind of threshold for fiduciary duty.
Well, that's powerful when you're able to pay back your private lenders, your investors first before you and your company get your money. That's what I call really putting your investors first.
Well, and I'm sure you've seen this in your decades of experience in the industry. I see some funds and fee structures that are absolutely, borderline predatory. Multiple fees going into a deal, acquisitions, underwriting, disposition fees, management. They take part in the commissions, and it really gets egregious in my, kind of humble opinion. So I think that I've got a philosophy that was passed down to my grandfathers, both of them actually, and they said, take care of your customers, your clients, your community, your employees, your vendors, everyone else, and the money will take care of itself.
Yes. My philosophy on raising private money from our private lenders is teaching, leading with value, leading with a servant's heart, and teaching people that really don't even know anything about this world. And I don't even associate a deal with it in my initial conversations. And interestingly enough, Thomas, so compared to you, my operation is much smaller. I'm only working with about $10 million that we rotate from single family house projects to single family house projects.
That's great.
And we have 47 private lenders that are funding all of those projects and deals. And what's interesting is not one of these 47 people had ever heard about private money or private lending until I put on my teacher hat and I started teaching them about this world of private money. And I taught them about the world of self-directed IRAs and how they can use retirement funds. So that's sort of a 50,000-foot view as to how I go about raising and attracting private money without ever asking anybody for money. I tell people, some new capital raisers will say, I've got a fear of rejection. And I answer that fear with a question, and that is, how can you be rejected if you're not asking anybody for anything? You're actually, you're exposing them to this world. And so that's sort of my outlook, my philosophy on attracting versus chasing. How would you describe your philosophy of attracting private money and not having to chase it?
I love, and I've watched a handful of your podcasts and your shows, and I love the magic phrase, as you call it, which is, I need your help. I think that is just such great positioning, coming to and bringing value to the table first and foremost, and just sharing investment opportunities. You look at an extremely affluent investor group like Tiger 21. You have to have net investable assets, I believe, of 20 million to meet their criteria to become a member. And only, I believe, around 29% of folks in Tiger 21, only 29% of their portfolio is held in publicly traded equities. The vast majority of their holdings is in what we would call alternative assets, in the space that you and I play in. So I think it's important to do what successful people do if you want to get what they've got and emulate them. And so by leading, as you said, with a service-based mentality and really trying to add value, be an educator, you become the authority in the space, and you really truly are helping these folks sleep better at night, accomplish their financial goals, and do so in a way that meaningfully helps a lot more stakeholders. And so everything that you just said, I am in total agreement with. And I think educating and then asking not for money, but for help, and leading with that is the best way to do it.
Well, for some reason, I thought we were going to be in alignment, Thomas. So I'm glad my spidey sense was correct. Now, my guess is you and I have got something else in common. And that is, when we first started raising private money and private capital, we learned some lessons at the very beginning and along the way as to, maybe we shouldn't go about it like that type of thing. So, did you have any challenges at the beginning and any lessons learned that you'd like to share?
A couple, marketers and advertising folks will always sell you the moon. So I would just, caution folks, into believing anything that marketers and advertisers out there will tell you about being able to get leads and grow your brand. You really just want to, again, start with driving value and talking about things that you're very knowledgeable about. And I think that's a great way to start. I would always caution folks, be a little bit more conservative in your first couple of deals when you're taking on your first few investors, because the last thing that you want is to do a deal that goes sideways and takes a whole lot of time, energy, and effort and puts a bad taste in your mouth and in the mouths of your first few investors. So be a bit more conservative starting out. But the last thing is believe in yourself, believe in your abilities, because there are people out there that know far less than you, and you will be the expert in the room. And so, trust in yourself and your abilities to go out there and do good things.
That word trust that you just said is so powerful. Trust in yourself. In my live events, I actually have my audience members stand up and repeat affirmations as I lead them along. And part of the affirmations that I have them repeat is saying, I trust myself. I trust others. Others trust me. And I've said it 1,000 times. In this world of private money, there's a 5-letter word that starts with T that's very, very powerful, that being trust. And the question is, who is going to invest with you if you don't have confidence in yourself to begin with, or trust in yourself to begin with? And so if someone is not feeling confident about what they are doing, what advice would you give on how do you get confident?
That is a good question. I think we've all experienced periods in time and in our lives where we're not sure, we're unsure of ourselves, or we're unsure of what you're doing. Ask those that are close to you, hey, what am I good at? What do you value my relationship or our relationship for? Why? And don't be afraid to solicit some positive responses, because sometimes we forget. My wife, the last couple of days, has been incredibly supportive. Just this past weekend, I had a friend who turned 40 on Sunday. I turned 40 4 months ago. And so we hiked 40 miles on Saturday. 40 miles. It took 14 hours. We were at about 5,000 feet elevation. And it was a really tough physical endeavor. But my wife for the last several days says, wow, I'm so proud of you. You were amazing. And it's been really great. And from time to time, I've had to solicit feedback from her when I've been feeling a little down on myself, when things have been tough. Hey, baby, remind me, why do you love me? What am I good at? And so that would be one of the things I said. That can be parents or friends or, religious folks and leaders in your life, a mentor, whoever that is. Ask some people and have them help kind of build up your confidence and self-esteem there, and your trust in yourself. Other thing that I did want to quickly mention, one of the reasons I got into the real estate in the private investment world was trust, and the lack of trust in 2008 that caused me to lose my entire life savings and have a negative net worth. I had just separated from the military. I was the ripe old age of 23, turning 24. And I had a little bit of money saved, and I invested that in the stock market. And I was a bit too aggressive at the time. I borrowed some money from a few different banks with some signature loans. I invested that in a stock trading account with a company called Scottrade. I think they've since been bought out. And I opened not a cash account, but a margin account. So I had, buying power that the brokerage firm was willing to provide me. And I bought options. And actually, I did exceptionally well. I made about $150,000 in 6 weeks. And then the market traded sideways. Things didn't go so well. And, that fateful kind of couple of months there, a couple of weeks in late September, early October of 2008, there was one period of time, Bear Stearns on Friday afternoon, the CEO, everything's fine, folks, everything's fine. We'll get through it. And by Sunday, they declared bankruptcy, right? And so the Senate didn't pass a stimulus package. The Dow was down, I believe, 900 points, which at the time was a massive, massive loss, 6 or 7 or 8%. And my brokerage firm closed out all my positions. I owed the brokerage firm, Scottrade, $50,000, and I owed the banks $30,000. I had a negative net worth and no job after just separating from the military. And so I completely lost trust in the conventional investment ecosystem and infrastructure. And now I only predominantly invest in alternative investments through either real estate or private lending because I don't trust what they do. I don't trust the leaders of other companies to have my best interests at heart. They don't have nearly as much money at stake as you and I do in our deals. So trust is paramount in my business.
Whoa. Well, the big lesson that I'm hearing there, Thomas, is by you making the rules and you being in the driver's seat of your business, then you're not playing by conventional, you're not playing by conventional rules, you're playing by your own rules. And so I'm so glad you shared that. What are your favorite ways to go about raising capital given your experience?
We like to do a couple different things. We like to host dinners. We just call them investor appreciation dinners. And, we used to give a big pitch at the dinner, and I would talk for 10 or 15 or 20 minutes at the dinner. And sometimes that goes really well. Lately, we've just been doing dinners for our investors, and we ask them to bring a plus two, bring another couple, folks that you know and that you like. And, as I make my way around the room with either myself or my colleagues, one of my colleagues, we'll keep these relatively small, 20 to 30, 35 people. You get a chance to interact with everyone. There's already a level of trust and validation because they are there with friends who are already invested with me and in our fund. So I really like that, the investor dinner and investor appreciation events. The other thing that I've really targeted in on are finding commonalities with people. I'm a pilot. I have a plane. I like to fly my plane. I like to go take people up to the Grand Canyon or Sedona or have a lot of fun. So those are one of the groups that I do a lot of outreach with. And I go to different aviation events, and I've got special business cards. They're actually they're pretty cool. They're metal business cards. So they really stand out here. When you hand somebody a metal business card and they go, wow, and they really take notice. So I think not only is the message important, but also kind of how that message is being delivered. And so if I'm delivering a message on an advertisement, that lands much different than if I'm delivering the exact same message at a dinner with people that are mutual connections, or at an aviation event that I've flown into and maybe another pilot's flown into, and we can share our love for aviation together. And then I can talk about investing. So I always look for some commonality to bring me closer to people and get that established trust and credibility.
Metal business cards. Nice. So you are one of two other people than myself that have metal laser engraved metal business cards. The first one I saw was over 10 years ago. Dear friend of mine, John Rulin, unfortunately passed away last year, but he wrote the book. He wrote the book Giftology.
That's right. Fantastic book. Fantastic.
Yes. And so John and I were at this same small mastermind meeting in Hollywood, California, over 10 years ago. And he handed me his little metal business card. And I went, whoa, I have never seen anything like this in my life. And his was like half the size of a regular business card. And it was stainless steel.
Okay.
Right. And so, of course, I said, John, man, you got to tell me, where in the world do you get these business cards? mymetalbusinesscard.com.
That's right. That's right.
Is that where you get yours?
Yeah, that's right. That's right.
That's amazing.
We're ordering another set, just when you give, and I've just got it right here, investments by pilots, or for pilots by pilots. And then it's got my contact info on the other side, a little QR code. But when you hand that to someone, because I just kind of talk, hey, I run an investment fund, and they go, oh, interesting. And you hand that to someone, immediately there's a shift, and they're like, oh, wow, this is really cool card. I have leveled up in their mind because I'm operating at a higher frequency, at a higher level, so
yeah,
I think
that's great. That's what you call how to start a conversation without saying anything.
Exactly. Some of the other things I do, and these might be a little silly. I just shaved. I had quite the beard, but I used to show up to different events, and I would have a huge mohawk or a big, kind of Fu Manchu or goatee or something. And that always generates a little bit of buzz. People are like, who's that guy with the wild suit or the mohawk or something like that. I want to go meet.
You mentioned private investor dinners.
Yes.
I do the same thing. I teach the same thing with my community. I love private lender luncheons. My very first private lender luncheon I put on years ago, I had my CPA there, my real estate attorney, my realtor, and I taught the opportunity with no deals attached to it. And just in that one private lender luncheon, I raised $969,000 at just that one little, 60-minute luncheon. So I know exactly what you're talking about. Let's switch gears, Thomas.
Yeah.
Let's talk about your fund or your funds. We've got people listening here to the podcast that are interested in being passive investors. They just want to get high rates of return that is, conservative and they want to feel safe about things. So take a minute and talk about your fund and why someone might be interested in reaching out to you to learn more.
Absolutely. So one of our flagship fund is called Lucrum I Fund. It's our income fund. And what we do is we make private money loans to other real estate investors with that fund. It is a very, very conservative investment fund that is designed to produce consistent, reliable monthly income to you. You can also compound that, reinvest it to grow and accumulate wealth over time. But as I mentioned earlier, I've got over $3 million of my own money invested in the fund. My executive team and advisory board has millions more invested in the fund, and something that we think is a bit of an industry first, or at least we haven't found this out there. And it's what we call our first loss commitment. And that is we absorb any loss that the fund takes up to the dollar amount that we have invested, which is hovering right now around $5 million. And so all of our investors can invest with that trust and that confidence, knowing that we are operating an incredibly conservative investment fund. So right now our fund LTV is only, I believe, 52%. So the market would have to go down by about 50% for my money to be at risk, and closer to 65% for our investors' money to be at risk. So that's an incredibly predictable and conservative investment fund that we have. We have another one that we're getting ready to launch, which is we're calling our Lucrum Lending Fund. So they do the same things, but our lending fund is going to be a bit more aggressive and have a slightly higher pay rate. Our pay rate between the two funds ranges from between 7 to 10%. That's dictated by how much you invest and for how long you choose to invest with us. In addition to that, we've got a few equity investment opportunities. We haven't launched those opportunities yet. We've got the land under contract. We're designing the buildings that will be built. So these will be new construction development opportunities. I'm a big fan of the Opportunity Zone legislation that came out in 2017, Donald Trump's Tax Cut and Jobs Act. I believe that legislation will get extended with some of the great benefits that were in that original 2017 legislation. So we've got quite a few Opportunity Zone projects. We've got about just under 100 million of Opportunity Zone projects that we've done. My single largest check writer is actually a family office here in Arizona. They wrote a $44 million check to me for one of our projects. And that was an Opportunity Zone project to take advantage of the numerous tax benefits there. So we've got some great income, private lending opportunities, as well as some equity investment opportunities here at Lucrum.
That sounds fantastic, Thomas. What's the best way for our listeners to get in contact with you and your team?
That's great. Our website is one of the best to reach out to us at. Again, lucrum.com, Lukrom, real simple there. It's a play on words. It's the Latin root spelled slightly different, but if you think of lucrative, Lucrum is actually kind of the Latin root. So we're just a little play on phonetics there. But that's awesome. The best way to get in touch with me or my team if you want to borrow or invest with us.
Okay, so that's the same website as to whether you want to borrow money for real estate or if you want to invest with you, right?
Absolutely.
All right, so that's www. Of course, this will be in the show notes, but www.lukrom, Lucrum, Lukrom.com. Thomas, what a pleasure to have you on the show. Parting comments to wrap us up.
I was asked the other day, I was on a podcast and someone said, hey, what digital resources do you recommend out there for folks? And I hesitated and I couldn't come up with a good digital resource. And I wish I would have been thinking a little bit better on that show. I'm pushing back and I'm saying, listen, I think that we need to do less on screens, and we should be diving into books, conversations with people, and, engaged in our own mind and thought. So that's my little bit is, put the social media down, go read a book, go connect with your family or friends, and get out there. The real world is out there, not in here.
I love it. Speaking of books, what are you reading these days?
I am halfway through Extreme Ownership, a book by Jocko and a guy, two former Navy SEALs, Leif Babin. And it hits close to home because during my first deployment with the Marine Corps, I was actually in the city that they talk about in the book. I was in Ramadi and had to, my job, I was a combat medic, I was a corpsman, and I had to take care of some friends that didn't make it, So I'm reading the book and I know the streets and I know all of the combat outposts and everything else in there. So that's the book I'm in the middle of right now. But as it relates to business, there's two books that I love and I absolutely recommend. One is on lending. It's called The Banker's Code. It's a fantastic book. And the other one is about investing in small multifamily properties. And that one's by Larry Loftus, investing in duplexes, triplexes, and quads.
I love it. Thomas, thank you so much for sharing your experience and your advice.
Jay, thank you so much for having me. I hope that I did a little bit of good for the listeners, and I've watched what you've done lately over the last, many years, and keep it up. I love what you're doing. Thank you so much, sir.
You got it. God bless you. There you have it. Another amazing episode of Raising Private Money. And as Thomas referred to in the show, my quote, I need your help. Here's what I need for you to do. I need for you to like, share, subscribe, follow me, listening to on the podcast. And if you happen to be watching on YouTube, be sure and subscribe and click that bell so you don't miss out. When you do this, when you leave me a 5-star rating and a review, that allows me to continue to keep bringing on amazing guests, just like we had today with Thomas McPherson. God bless you. Have an amazing day, and I look forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.